Hey everybody, it's Shannon from alphatrends.net. Today's Friday, the 21st of August, 2015, and we had a very ugly week here for the market. The S&P 500 lost a little less than 6% for the week. The Nasdaq down 7%, and across the board selling besides the bonds. So a little flight to safety there. The only sector that we really look at that's positive year to date is the biotechs, but they are down 6% this week and 11% this month. So let's take a look at the charts and see where we are. The S&P 500 smashed through that prior level of support. And if you look at alphatrends.net on Wednesday, I put a video out for the public that in which I referred to the S&P 500 as looking very ugly, and that the Nasdaq was a giant mess. So Thursday, I had told people at the end of the day that I was expecting a gap lower in the markets. I wasn't expecting it to continue this far down, but we are now in the S&P 500 down to the next potential level of support. Now, the issue with potential levels of support, as we know, is that they're just potential levels. Until we see intraday that the buyers are actually gaining control, we're just playing guessing games by buying into that. We are below the declining 5-day moving average as we have been since Wednesday, and that means the intermediate term trend is guilty till proven innocent. So if we look at the 10-minute chart here of the last 15 days or so, we just had a horrible day, and almost the entire session today we spent below that declining volume weighted average price, and you can see we had two tests of it, and they held as resistance on both tries. So going into next week, we're obviously in a very difficult position for this market. It's been a huge bull market for years now, and these are the first real big cracks we've seen in a while. So we've broken the trend line that's been established, been in place rather, since 2011. That was broken this week, and we are also just testing these lows right in here. So we have the potential that this market will find support in here, but potential is, again, not a reason to buy. We've certainly gotten oversold, and I would think that when we see a bounce, I'm not going to try to make predictions. We just don't know what's going to happen Monday, but the trend remains lower. If we see bounces, I would expect that this prior band of support up in here is likely to become resistance if it can make it all the way up there, that is, over the coming week or two. So again, the market is heavily damaged here, and one of the biggest declines we've seen this year is in the oil market, which did trade below 40 bucks a barrel today. So this market again is seems like the lows of 2009 in near those low to mid 30s are not unreasonable at this time. So the Nasdaq, for its part, we lost this little trend line, and we lost this 50-day moving average in support. As I said Wednesday, I said it was a giant mess, and it was not looking like something that you wanted to own, especially after all that volatility after the Fed minutes on Wednesday. We can look at a 5-day chart. That'll show us a little bit more clarity. This was a big volatility day, and obviously we finished right at the lows today. It's too damaged to buy right now, and it's too late to sell short. I think you've got to ask yourself, where has it come from? Down basically 10 points here over the last 4 sessions, and we've got to let things settle down a bit. If we get a bounce this week coming up, then I would expect this prior little band of support in here is likely to become resistance. So the longer term trend, we can see that the trend line here from 2013 has been broken. And going to the Russell 2000, of course, this market had been holding that longer term level, which was the resistance in 2014, had been holding as support this year. Now, we knew the market was already in a downtrend. That was established. It was making lower highs and lower lows, so there was no reason to be a buyer of it. And we came up to the declining 5-day moving average on Wednesday as well. Besides that, we were looking at these prior support levels. So there were a lot of reasons to avoid the Russell 2000 or to be short it. And if you're not familiar with those concepts, let me tell you for a moment about a class that I teach, the intermediate level class. It's only $397 a month. I see people out there offering classes that people that I've taught offering classes that are 2 to 3 times that amount. There's 16 video segments, 9 hours of education. There's 3 live 1-hour webinars to get all of your questions asked. And now with this market volatility is a great time to really brush off your learning, or to step up what you know and learn defense. But there's quizzes that I send out as well, and the webinars are spread out over 3 weeks, and then you get a 1 month free subscription to Alpha Trends Gold level. So it's a great deal, and you can find that at alphatrends.net. The semiconductors have been the real disaster here this year. They broke this longer term uptrend line from late 2013, 12 rather, and we've known that this group was in a downtrend, and we've been saying at best it was trying to neutralize, but we don't trust markets with a declining 50-day moving average. We expect that markets with a 50-day moving average is declining, that rally attempts will fail to hold, and that's exactly what we saw in here, that this bigger level of support over the last month was broken, and then we've just seen this market flush lower here, and obviously inflicting massive damage on the longer term time frame. The biotechs had a rough week. They could be coming into perhaps this level down in here, near about 335-ish. They are also right at the 200-day moving average, just a little bit below it. But right here, we've got, I think that it's reasonable to think that we can at least test or flush through this level before a bounce does come. It's a high risk game trying to trade for a bounce, and you have to be involved, minute by minute to get it, is the way that I view it. Although when you look that close at the market, sometimes it becomes a little bit, you're a little bit too looking at the what am I trying to say, the leaves and the trees rather than the forest itself. So anyways, the the biotechs have finally gotten hit here a little bit. They are still up though, year to date, 12%. So it's not too late for people to lock in profits. We saw weakness in this group start out about a month and a half ago with that Biogen sell-off, and that really was the first crack in the biotech to say even the big ones are not immune. So have your strategy. Apple did what it's supposed to do this week. That is continue lower. It's in a downtrend. Whether you like the company and their products or not is irrelevant. The stock is in a downtrend. It's below a declining 10, 20, and 50-day moving average. I've been saying that it's in a downtrend for weeks now, and it continues to get hurt here. Where's the bottom? I have no idea. There's the potential that maybe it comes down to this prior level of resistance late last year, which was support earlier on in the year, and we're pretty much closing in on that very rapidly at this 105-ish level. But the trend is lower, so there's no reason. You don't have to be in a hurry to buy Apple. Think about the last time Apple came down so hard, and people were in a hurry to buy this thing. It took over a year for that stock to become a good buy once again, a stock that was in an uptrend. So there's no hurry to get involved. Learn how market structure works. That's what I teach, and that's what I want to help you with as well. If we look at some of the moves this week, there's a feeling that you can hide out in so-called blue chip stocks. And I'll tell you that blue chip is just a marketing term. Look at shares of DuPont this year. Look at shares of Disney and Company. They just lost 20% in the last couple of weeks. Caterpillar's in a horrible decline. Walmart has been getting smashed, and I've been people saying, hey, it's at support, it's a buy. It's not a buy when we have a declining 50-day moving average. These are basic concepts that can help you avoid big losses and actually make money when the market is declining.